Imagine it's a quiet evening. You're sitting on the couch, perhaps with a warm cup of tea, and the world outside is winding down. It's just you and your thoughts. Now picture this. You're at the start line of a great marathon, but this race isn't about physical endurance. It's about financial growth and the journey of understanding the stock market. That's the conversation I want us to have tonight. Something personal, enlightening, and perhaps transformative. Let's start with a story. Once upon a time, not so long ago, there was a little boy named Alex who was fascinated by the world of stocks. Every night, he watched his father at the kitchen table, reading the newspaper, circling numbers, and scribbling notes in the margins. Alex didn't understand it back then, but it sparked his curiosity. Fast forward a few decades, and here I am, that little boy, sharing with you the wisdom I've gathered over the years about investing in the stock market. The stock market, for many, feels like some distant, enigmatic entity. But at its core, it's a marketplace, not unlike your local farmer's market. At the farmer's market, you exchange money for apples. In the stock market, you exchange money for a slice of a company and its future potential. It's essentially buying a small piece of a business, rooting for its growth, and hoping to benefit from its success over time. Let's unpack this further. Investing in stocks is, at its simplest, about owning a piece of a company. Imagine your favorite company, the one whose products you can't live without. Maybe it's a tech giant like Apple or an entertainment powerhouse like Disney. When you buy a stock, you're purchasing a tiny part of that company's ownership and, in turn, share in its profits or losses. Now, you might be wondering, why is the stock market so essential? Why not just keep my money in savings? That's a great question. The allure of the stock market lies in its potential to grow your wealth over time, often at a rate that surpasses inflation and outpaces the interest you'd earn from a savings account. Historically, the stock market has delivered average annual returns of about 7 to 10%, which can significantly compound your wealth. Compounding is the secret sauce here. Imagine a snowball rolling down a hill, gathering more snow and growing larger. That's compounding. Your profits generate more profits. Albert Einstein supposedly called it the eighth wonder of the world, and it's a key reason many investors choose the stock market for long-term financial growth. However, let's talk about the big elephant in the room: risk. Just as opportunities for growth are plentiful, so too are the risks. The stock market can be volatile. Prices fluctuate daily, driven by countless factors: economic data, geopolitical events, and even market sentiment itself. Remember the economic downturn in 2008 or the market panic in 2020 caused by the pandemic? These events remind us that investing in stocks is not without its turbulence. But here's the thing about risk: it's not something to be feared, but understood and managed. Much like learning to ride a bike, where the initial fear is soon replaced by confidence with practice and balance, investing in stocks requires learning how to navigate and mitigate risks. Diversification is one such strategy, akin to not putting all your eggs in one basket. By spreading your investments across different companies and industries, you reduce the impact of a downturn in any single area. And then there's the emotional side of investing. It's a dance between fear and greed, two powerful emotions that can cloud judgment and lead to impulsive decisions. Fear might prompt you to sell your stocks at the sight of a market dip, while greed might tempt you to chase after the latest hot stock, regardless of its foundations. The key is finding a balance, being patient and sticking to a plan. Remember, investing is a marathon, not a sprint. A good mental model for this is treating your investments like a garden. You plant seeds by buying stocks, and with patience and care, you watch them grow. You don't uproot your plants at the first sign of a cloud, nor do you overcrowd your garden hoping for an instant harvest. Instead, you nurture it steadily, let it flourish in its own time, and enjoy the fruits of your labor in the long run. Let's reflect on this with an example. Think about Warren Buffett, one of the most successful investors of all time. He didn't build his wealth overnight by chasing trends. Instead, he invested in companies with strong fundamentals and held on to them for decades. His approach is a testament to the power of patience and long-term thinking in the stock market. Investing isn't just about numbers and charts. It's also about mindset. It's about understanding that volatility is part of the journey and that the market's ups and downs can be smoothed out with time. It's about recognizing that short-term losses don't define your financial future, but rather your ability to stay the course does. In the end, the stock market is a tool, a vehicle for building wealth if used wisely. It requires education, a bit of courage, and a lot of patience. As you sit there pondering your next financial move, remember that the journey into the stock market is deeply personal. Each step you take, each decision you make, shapes your understanding and relationship with money. Let's end our chat with a thought to reflect on. Investing is not about beating the market or getting rich quick. It's about setting goals that align with your values, understanding your risk tolerance, and being committed to the journey, through the highs and the lows. Just like any great story, it's not the ending we cherish most, but the experiences and lessons we gather along the way. So, as you think about your financial future, ask yourself, what kind of story do I want my investments to tell? All right, everyone, welcome back. Let's dive deeper into this fascinating world of the stock market. So far, we've touched on what a stock is and how the stock market is like a big marketplace where people buy and sell these little pieces of companies. Now, let's chat about why people are so drawn to investing in stocks in the first place. Imagine you're planning for a big trip a few years down the road. You want your money to grow to make this trip as amazing as possible. One way to potentially make that happen is by investing in stocks. Stocks have historically offered higher returns compared to other safer investments like savings accounts or bonds. But remember, with higher returns often comes higher risk. Now, let's talk about risk for a moment. This can be an intimidating word, and it's one of those emotions that often keeps people away from investing. But think of risk as just the possibility of things not going as planned. In terms of stocks, it means that the price of a stock might go down after you buy it. It might even go up and down several times before you decide to sell it. The key is managing this risk in a way that aligns with your personal comfort level. Many people manage risk by diversifying their investments. This means not putting all your eggs in one basket. If you invest in a variety of different stocks, or even different types of investments altogether, you're less likely to be affected by the ups and downs of a single one. It's like spreading out your bets so that if one doesn't work out, you have others that might. Another important aspect of investing is time. The stock market is best suited for long-term goals. A longer time horizon can allow you to ride out the market's ups and downs and take advantage of the power of compounding, where your returns can earn even more returns over time. It's like planting a tree and giving it the years it needs to grow tall and strong. But here's where emotions come into play again. When the market goes down, it's normal to feel anxious. Our instinct might be to sell everything to avoid losing more. But often, the best course of action is to stay calm and not react hastily. This is where having a plan can really help. If you know why you're investing and what your goals are, you can make more informed decisions even when the market feels like a roller coaster. So how do you start? A simple way many people begin is with mutual funds or exchange-traded funds, ETFs. These are collections of stocks, so when you invest in one, you're automatically diversifying. It takes some of the pressure off choosing individual stocks by yourself. Remember, investing in the stock market is a journey. It's about learning and adjusting as you go. It's about knowing your own comfort with risk and making choices that fit your life and your dreams. It's also okay to ask for help. Financial advisors or even trusted online resources can guide you, especially when you're just starting out. All right, that's a wrap for today. I hope you're feeling a bit more comfortable with the idea of the stock market and maybe even inspired to take a closer look at how it might fit into your financial plans. As always, keep learning, stay curious, and remember that every big journey begins with a single step. Until next time, happy investing. All right, welcome back, everyone. Last time we dove into what the stock market actually is, a place where you can buy and sell shares, which are little pieces of ownership in companies. Now let's chat about how this whole process starts and what it might mean for you. Imagine you're opening a small bakery. You love baking and you've got great recipes, but you need some extra cash to buy ovens and ingredients. So, you decide to bring on some friends or family members who give you money in exchange for a slice of ownership in the bakery. That's a lot like what companies do when they go public on the stock market. They sell shares to raise money to grow their business. As an investor, when you buy a share, you're buying a small piece of that company's future. If the company's sales go up and profits grow, the value of your share might increase. That's exciting, right? But let's pause there and talk about the emotional side of this. Investing can be thrilling. It's like being part of a big adventure. But it's important to remember that ups and downs are part of the journey. Stocks don't always go up. They fluctuate, which means they can rise one day and fall the next. And this is where emotions can really come into play. It's normal to feel anxious when things don't go as planned, or ecstatic when they do. The trick is to not let these emotions dictate your decisions. Making smart financial choices often means thinking long-term and not reacting to every little bump in the road. It's about setting goals for your money and sticking to your plan, even when it's tempting to make impulsive decisions. Remember, investing isn't about getting rich overnight. It's about growing wealth thoughtfully over time. Now, you might be wondering, how do you get started with all this? First, you'll need a brokerage account. Think of this as your digital wallet or account where you can buy and sell stocks. There are plenty of options out there, some traditional ones with lots of support, and some new, app-based ones that are super user-friendly. Look for one that feels right for you, especially one that's easy to understand and doesn't charge crazy fees. Once you're set up, start small. Pick companies you're curious about or familiar with. Maybe it's a brand you love or a service you use all the time. Begin with an amount of money you're comfortable with and can afford to set aside for the long haul. And here's a little gem of wisdom. Diversify. This means not putting all your eggs in one basket. By spreading your investments across different companies or industries, you're reducing the risk of losing money if one company doesn't do well. We'll talk more about strategies and diversification in upcoming episodes. But for now, remember that learning and patience are your best friends here. Mistakes are part of the learning curve, and every investor, even the most successful ones, have made them. The key is to learn from them. Thanks for joining me on this journey into the stock market. Stay curious, stay informed, and most importantly, stay calm. Catch you next time.